Euro to US dollar just hit 1.1522, and the NFP is about to drop. The dollar index is breaking down, institutions are loading up, and this symmetric triangle on the 4-hour suggests a 100-plus pip move is imminent. I've got 3 specific setups, 2 scalps and 1 swing, with exact levels you can use right now. Don't short the NFP without watching this first. The Nonfarm Payrolls report is dropping in just a few hours, and Euro to US dollar is absolutely coiling at 1.1522 inside one of the tightest symmetric triangles I've seen in recent memory. If you think this is just another NFP print, you're missing the bigger picture. The US dollar index has already broken down below its core structural support. Institutional order blocks are stacking up on both sides of the market, and the smart money is positioning for what I believe could be a 150 to 200 pip explosion in either direction. I've been through dozens of these NFP releases, and I can tell you right now, the setups we are looking at today are about as clean as they get. We've got the event risk, we've got the technical compression, and we've got the fundamental backdrop that could trigger a true regime shift for the euro. I'm going to walk you through exactly how I'm trading this, including 2 scalping setups, 1 swing strategy, and the exact levels I'm watching to confirm the breakout.my bias heading into this NFP release is bullish for euro to US dollar. But here's the catch, I'm not just blindly buying dips. The invalidation level for my bullish thesis is a clean daily close below 1.1440, because that would tell me the market is rejecting these levels despite the dollar weakness. Right now, the pair is trading at 1.1522, up 0.12% on the session, and we've got a clear triangle formation on the 4-hour chart that suggests we are building energy for a significant move. I want to see how the market reacts to the NFP print before committing heavily, but I've got my orders positioned at strategic levels to catch both the initial move and the post-data momentum. Here's what I'm watching, and I want you to pay close attention to the 1.1550 resistance and the 1.1480 support, because these are the levels that will determine the next major directional move for this pair. Let me take you through the technical structure from the top down, because this is where the story really gets interesting. On the weekly time frame, Euro to US dollar is up 2.45% over the last 30 days, and we are seeing a clear breakout from a long-term multi-month base. The moving average alignment is textbook bullish. The MA50 at 1.1390 is now trading above the MA200 at 1.1250, and that golden cross confirmation provides a strong structural foundation for the uptrend. I've seen this exact configuration before in early 2023, and when the weekly momentum is this constructive, it usually takes a major fundamental shock to reverse the trend. Now moving down to the daily chart, price action is consolidating tightly near multi-month highs at 1.1522, and the RSI at 58.7 tells me we are in constructive bullish territory without any overbought constraints. The MACD is positive at 0.0018 with steady histogram extension, and the ADX at 26.4 confirms we have a well-established daily bullish trend. What stands out to me is the CCI sitting at 48.2. We are perfectly positioned within neutral momentum parameters, which means we have room to run without needing a pullback to reset overbought conditions. The 4-hour chart is where the real action is happening. Price is compressing horizontally within a clear symmetric triangle pattern, and the ATR at 0.0068 reflects typical pre-news compression ranges. This is classic behavior ahead of high-impact data. Market makers are letting order blocks build up inside a tight range, and we are seeing volatility contracting as institutions position for the NFP release. The stochastic at 68.1 is gradually turning upward, indicating near-term buying pressure is building on the 1-hour time frame. We are seeing a minor upward acceleration of the intraday dynamic trendline support at 1.1500, and this is where I'm watching for the first signs of directional bias. The MA5, MA10, and MA20 are all aligned bullishly at 1.1518, 1.1505, and 1.1485 respectively, and the Williams are at -31.4 suggests steady demand accumulation on minor intraday pullbacks to here's what I'm really focused on, the structural levels. Key support sits at 1.1480, and if we break below that, the next downside targets are 1.1440 and 1.1390. On the upside, Resistance is stacked at 1.1550, then 1.1590, and a major overhead supply at 1.1640. The daily pivot point at 1.1510 is currently acting as a fulcrum for price action, and I expect a decisive break of this range to trigger the next major move. Now let's talk about the real catalyst, the US employment data. The non-farm payrolls and unemployment rate dropped today at 12:30 a.m. New Zealand Standard Time, and this is arguably the most important macro release of the month. The market is priced for a specific outcome, and any deviation from expectations is going to trigger significant volatility. The US dollar index has been under persistent pressure as safe haven positioning unwinds globally following trade channel resolutions. This dollar breakdown is structural. We are not talking about a minor pullback, we are talking about a potential regime shift in dollar sentiment. The 1.1500 level for euro to US dollar has transformed from a psychological resistance ceiling into an active, verified institutional demand floor, and that tells me the smart money is positioning for further euro strength. But here's where it gets interesting. The Federal Reserve's policy path is the real driver here. If we get a significant employment slowdown in today's NFP print, it will solidify the Fed's rate-cutting path and likely launch euro to US dollar past those multi-month highs. The market is actively leaning toward a more aggressive monetary easing cycle from the Federal Reserve, and this yield spread compression continues to provide a tailwind for the euro. The European Central Bank maintains a data-dependent, cautious approach to rate adjustments, and this divergence in central bank policy expectations is creating a fundamental tailwind for EURUSD. I want you to watch the 10-year yield reaction alongside the NFP print. That's where the smart money is going to show its hand. If Treasury yields drop sharply on weak employment data, that's a green light for euro strength. But if yields hold steady or actually rise, we could see a knee-jerk dollar rally that catches the market off guard. Let me give you 3 specific setups I'm trading heading into and following the NFP release. These are exact levels with precise triggers, stop losses, and profit targets. Scalping setup number 1. Breakout to the upside. This is my primary scalping trade. I'm looking for a clean momentum candle close above 1.1540 with confirmation from volume and RSI acceleration. My entry will be on the break itself, with a target at 1.1565 for the initial take profit. My protective stop loss sits at 1.1525, which gives me a solid risk-reward ratio of about 1.7 to 1. If the breakout has real momentum, I'll trail my stop and look for an extended move toward 1.1590. The invalidation level for this setup is a rejection candle back inside the triangle range. This is the classic breakout trade, and I've seen it work dozens of times ahead of major data releases. Scalping setup number 2, breakdown to the downside. This is my alternative scalping strategy. If we see a clean intraday breach beneath 1.1505, I'll trigger a short trade with a target at 1.1480. My stop loss is positioned at 1.1520, giving me a similar risk-reward profile. The invalidation level here is a quick recovery back above the breakdown level within the first few minutes. What I'm really watching for is a false breakdown. If the market takes out the stops below 1.1505 and then aggressively reverses, that could be the setup for a major bullish move. I've seen this exact pattern play out on NFP days where the initial reaction is a false break that traps traders on the wrong side. Here's a personal insight for you. In my 20 years of trading, I've noticed that the first 15 minutes after an NFP release are often the most treacherous. The algorithms run their initial liquidation sweeps, and then the real direction shows up in the second half hour. That's why I'm planning to scale into positions gradually rather than going all in on the first move. Swing trading setup. Post-NFP execution. This is where I'm putting the bulk of my risk. For the bullish scenario, if a hot NFP print triggers a sharp algorithmic flushdown into institutional liquidity pockets, I'll scale into buy orders between 1.1440 and 1.1470. My target is a structural swing recovery back to 1.1590, with a long-term protective stop loss set at 1.1395. This trade is built around the idea that dollar weakness is structural, and any NFP-driven dip is a buying opportunity. For the bearish alternative, if A weak NFP report triggers a vertical exhaustive rally into deep structural overhead supply. I'll scale into short setups between 1.1590 and 1.1630. My target is a multi-day retracement back toward 1.1490, with an index safety stop placed at 1.1660. The risk-reward ratio on the swing trade is about 1.8 to 1, which is exactly what I look for in high-conviction setups. Now here's what I want you to understand about these setups. I'm not just throwing levels at you. I've been tracking this specific pattern for months, and the triangle compression combined with the dollar breakdown is exactly the kind of setup that produces explosive moves. The key is patience and execution. Let me take 30 seconds to talk about risk management because this is where traders separate themselves from the pack. For a high-impact event like NFP, I'm reducing my normal position size by about 50%. This isn't a normal trading session. We are looking at a potential 150 pip swing in either direction, and that kind of volatility can destroy accounts if you're over-leveraged. Here's a personal rule I've developed over 20 years. On NFP day, I never risk more than 1% of my account on any single setup. Even if I'm running multiple setups, the total exposure never exceeds 2%. This has saved me more times than I can count. I remember one NFP back in August 2022 where the market did a complete 180-degree reversal in under 15 minutes. The algorithms just went haywire, and traders who had their stops too tight got wiped out. That's why I'm using wider stops on the swing trade and tighter stops on the scalps. The key is to respect the invalidation levels. If the market breaks my levels decisively, I'm out. No questions asked. So here's my bottom line for euro to US dollar heading into the NFP release. The technical structure is bullish, the dollar breakdown is structural, and the fundamental backdrop favors euro strength. But the NFP print is the key catalyst that could trigger either a breakout above 1.1550 or a pullback toward 1.1440. I'm positioned for both scenarios, and I'm watching those levels very carefully. The level I'm most focused on is 1.1480 support and 1.1550 resistance. A decisive break in either direction is going to tell us the next major directional move. If we break above 1.1550 with momentum, I'm going to be aggressively buying pullbacks. If we break below 1.1480, I'll be looking to short rallies. I want to hear from you in the comments. Where do you think euro to US dollar is heading after the NFP? Drop your thoughts below and let's see if we can build some consensus. Don't forget to hit that subscribe button and turn on notifications so you don't miss my post-NFP breakdown. I'll be going live in the next couple of days with a market wrap, and I'll be giving you specific levels for next week's trading. This is Alpha Market Meridian signing off. Stay patient, stay disciplined, and I'll see you in the next breakdown.